Hey everyone, welcome back to the channel. If you've been watching the Federal Reserve or tracking inflation or just trying to figure out what's going on in the economy, I would probably say this video is actually for you. Today I kind of want to highlight why the Minneapolis Fed President Neel Kashkari is pushing back against near-term rate cuts and what that really means for you, me, well, Americans essentially, and the markets. So just setting the stage, let's look at the deal here. A lot of people were expecting the Fed to start cutting interest rates by mid-2025. Recently, Neel Kashkari said, hold on, pause, process. And essentially his reasoning is pretty simple. It's just based off uncertainty, especially around U.S. trade policy and the return of major tariffs. In Kashkari's view, those tariffs could shake up the economy in ways we don't fully understand yet. So what he's saying is, let's hold the rates where they are. Let's watch what happens, maybe avoid overreacting, and again, taking a step back at a high level view, pausing and processing before implementing some adjustments to the fiscal policy. So why is this a big deal? Kashkari is warning that tariffs could cause two big things. And I know you all have seen it on the news and different headlines, especially across social media. One is short-term inflation could spike, obviously. Two, we could see job losses, especially in manufacturing and trade in heavy sectors. Now, here's where I would say it gets kind of tricky. The Fed might be okay with just a little bit of inflation if it helps support jobs, right? But if inflation expectations start to rise long term, that's when the Fed has to act. And that's the line they don't want to cross. And not only, Neel expressed that, there was a few other Federal Reserve presidents that expressed the same sentiment. But what's the sentiment across the market and across Americans as well? So if we zoom out a little bit here, is Kashkari just being cautious, or is he going off data? I mean, is the data backing him up or not? Let's look at just three things. Number one, consumer prices. In March, inflation actually dropped slightly, down 0.1%. But year over year, prices are still up 2.4%. So we're better off than a few months ago. Kudos. But it's not great. Number two, consumer confidence. I would say this one's pretty big. Confidence just fell to a 4-year low. People are nervous about jobs, prices, what's coming next. Again, it's kind of alluding to the uncertainty I just spoke about a second ago. Markets are panicking, companies are panicking, people are panicking. They do not know what to do next. That drop can lead to less spending, which slows down the economy. Number three, bond markets. This is a huge one, and I'll make a separate video on this, but the U.S. bond market is showing signs of stress. Yields are swinging, investors are anxious, and that usually means there's a deeper concern about recession or instability. And this is a little bit outdated, but obviously, fast forward, President Trump issued a 90-day pause on some of the tariffs. That was pretty much due to the bond market. So why does this matter to you? So how does this affect you? The simple version of this is, if you're trying to buy a home, refinance, or borrow, interest rates are not coming down right away. Next, your grocery bill. If tariffs drives up prices, you'll probably feel that in everyday purchases. And if the Fed waits too long to step in, it might take longer for the prices to settle. If you're investing, this is the time to be extremely careful. The Fed's focused on stability, not short-term gain. Again, they're more so focused on stability, not short-term gain. That could mean more volatility in the months ahead. Again, that's just speculation. There's some things to probably watch out for and ask yourself, what should we do next? Keep an eye on inflation numbers in April and May specifically. If they spike again, rate cuts are likely off the table until late in the year, or maybe even 2026, even though it was projected mid-year they were going to do a rate cut. But again, we'll see. Also watch signs of stress in the job market, especially in retail and manufacturing. If hiring slows or layoffs increase, pressure on the Fed will start to build. So what's the bottom line? Kashkari is playing it cautious, same with other Fed presidents. And honestly, that's not a bad thing. The Feds just want to get it right, not fast. It's kind of like that saying, work smart, not harder. It's the same parallel. Get it right, not fast. In a time of uncertainty, patience might be the smartest move. And definitely in the coming months and later on this year, we'll definitely see how this tariff thing really plays out. So I'll pose that question to you all. So what do you think? Is the Fed doing the right thing by holding back on rate cuts, or should they step in now before confidence gets worse? Let me know in the comments. I want to hear for your take. And if you valued this breakdown, smash the like button, hit subscribe, and share with someone who's trying to make sense of the economy. Thanks for watching, and I'll catch you in the next one.